Hello, my name is Max Lopez and I did my capital budgeting case on IBM. So for question 1, we look at what investments IBM made in 2016 to fund future growth and increase shareholder value. Now they nearly spent $6 billion in research and development, around $4 billion in capital expenditures, and around $6 billion in acquisitions. Now, when we look at research and development, it breaks down into their artificial intelligence of Watson. And when we look at acquisitions, they acquired many companies with cloud services to increase their cloud performance. But we'll talk about that in question 3. So for question 2, we look at Standard & Poor's ratings on IBM's senior long-term debt, their preferred stock, and commercial paper. Now for their senior long-term debt, they were rated a AA negative, which puts them in the second best category. And the negative simply means they're at the bottom of that category, so they are in a very strong position to pay off their obligations if necessary. And they didn't have outstanding preferred stock in 2016, so this doesn't apply. But for commercial paper, Standard & Poor's rated them at a A1 positive, which puts them at the best category, and the positive simply means that they're at the top of that category, and this means that they're in a really strong position to pay off any obligations. So now we look at question 3. Now the first part asks to describe IBM's investment in new software development and engineering. Like I said in question 1, they focus their investing in cognitive solutions, their cloud platform, and security platform. And which means that they invest a lot of money in their artificial intelligence of Watson, and they increase their cloud platform capabilities through their acquisitions, and also their security platform as well. And the second part of the question asks, did the amortization of software costs increase from 2015 to 2016? And it did increase, as you see from the graph, by $80 million. Asks, what kind of financial instruments were included in the sensitivity analysis? Those that were included were the cash and cash equivalents, marketable securities, short and long-term loans, commercial financing and installment payment receivables, investments, and short and long-term debt. Now, number 5 asks us to describe IBM sensitivity analysis. And they do this by calculating the risk of loss of the fair value of their investments from the effects that might occur on interest rates and foreign currency exchange rates on market-sensitive instruments. Now, to my understanding, this will only give you hypothetical gains or losses, but this is the best estimate they have. And certain items are excluded, such as direct finance leasing and short-term and long-term receivables. And that concludes my video. Thank you for watching.